following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Tom's out this morning. He'll be back doing his program live this afternoon at 3 o'clock. Jumping into the markets, we got markets in negative territory to kick things off. You're looking at an S&P off 19 points right now, trading at 38.83, catching a little bit of a bid in the last half hour on the opening bell. We were as low as about 38.61 pre-market early at about 3 a.m. in the S&Ps. We're a solid 22 points above that level, currently trading down about 0.5%. NASDAQ 100 off about 1.2% right now. Volatility making a low on the opening bell of 13,358. We're up a bit from that level. You get the Dow right now down 90 points at 31,343. But you see the acceleration. We were down at about 31,200 coming into the pre-market action. And the Russell right now flat, within 1 point to where we were on the close on Friday. We're trading at 22.66. You were as low in the Russell at about 22.36. You're talking about a solid 30-point pop from where we were this morning. Commodities, we got to jump around. Bitcoin, whether you call it a commodity, a currency, whatever you call it, it's got some volatility this morning. How about opening last night at almost approaching 58,000? Things really looked dicey this morning. Just at 9:15 this morning, we were down there at 48,320. We caught a little bit of a bid. You're now down just shy of $2,000 on Bitcoin. You're trading at 53,460. Crude catching a bid up $1.72 to almost $61, trading at $60.99 right now. We got the gold contract up $27 at $18.04. We were down there at $17.59 just on Friday, so you're approaching almost $50 from those lows we had Friday early in the action. Silver right now up 52 cents. You're trading at $27.76. And we got to jump over to notes and bonds. Quite the move to lower price, and we kind of rejected that action early this morning. The 10-year was down to 135.01. We just spiked up to 135.18. I'll pull up the yields in a moment. Right now, you're looking at a 10-year yield of approaching 1.35%, even at these levels. Right now, we got to check out copper. Check out the action in copper right now. Up an additional 6 pennies, up 1.7%. We reached a high at about midnight last night of $4.21. You put copper on a daily. Talk about an acceleration. Even from just February 5th, you're trading from a price point of $3.55 about. And we're now sitting at $4.15, we'll call it, in the price of copper. And we'll jump over to the volatility index this morning, getting a little bit of a spike. Putting it on a 15-minute, things looked a little dicey last night. We reached a high at 25.09. As we've opened up a bit, markets catching a little bit of a bid. You only have the S&Ps down about 18 points right now. You got the VIX trading at 23.31. All right, jumping right into it in terms of what we have happening. One of the headlines out there this morning, bond yields continue to climb as stocks slump. Copper rallies there. The headlines coming at you. Inflation risks send copper climbing above $9,000 a ton. We get the NASDAQ pulling back a bit. Some of these tech stocks, though, just taking a look at it. Amazon shares, for instance, some volatility. We reached $31.94 in the open. We then spiked to a high of about $32.32. We're down about 1.2% on Amazon. Apple had some volatility as well. We were as low as 127 pre-market. You make it back to almost 130 on the opening bell. We've now given back almost those $2 in gains. Apple's down about 1.4%. Let's check out Tesla because we're going to jump over to Bitcoin. Tesla is down 2.7% right now, trading at $760. So the Bitcoin action. Now, I talked about this kind of last week. We put Bitcoin on a daily. All right, even if you just run the A to B potential C to D expansion we have, if you put an A point here at about 17,500, you put your B point here at the highs of about 42,730, you're talking about almost a 25,000 A to B leg. You back off. Now, we'll put a little Fibonacci on here, okay? We back off about a 50% retracement from the run we had on December 11th. We make a high of January 8th, you back off about 50%. You chop around at that level from about January 22nd to January 28th. You then take off from 30,000 up to 57,790. I just said A to B is 25,000. If your C to D leg is a 25,000 run as well, you're talking about 55,000. That would be a mimic of the A to B leg. The C to D leg, you go from 30,000 to 55,000. Not surprising that you might see a little bit of short-term volatility. Doesn't mean in the long term that this thing can't push higher. But boy, oh boy, I mean, all things considered, folks, we just traded from a price point of 10,000 in September to 57,790 in Bitcoin. And we got to talk about what's going on in terms of the speak out there. How about, number one, we'll start it with, when you have the man himself, Elon Musk, saying Bitcoin prices seem high after a record week, you really better start paying attention. Now, the headlines are everywhere. Tesla has made about $1 billion in profit in its Bitcoin investment. You got Dan Ives out there, I believe, Wedbush analyst, fairly notable analyst out there, saying that Tesla's made roughly $1 billion in paper profits in investment in Bitcoin, according to Ives, and that is on a trajectory to make more from Bitcoin investments than profits from selling electric vehicles in all of 2020. A remarkable statistic. It might point to a bubble. And with the action we're seeing today in Bitcoin, something to keep your eyes on. Doesn't mean it's going to happen, folks, but we're in the probability business. And you better believe if Bitcoin trades from a price point, we're even going to go from where we were at about 3 a.m., which was just shy of 57,000. You spiked down to a low of 48,000. You lost about $9,000 in the price of Bitcoin. All right, that's like a 15% haircut from where we were at 3 in the morning to where we were at 9:15. But guess what? We've just popped 5,000. We've popped almost 10% from the lows we made. Talk about a volatile market in a big way in Bitcoin. But anytime you got Elon out there saying maybe it's too high, you got analysts out there writing that Tesla on the forefront of electronic vehicles making more in Bitcoin than they are and making in their basically core business. Just something to keep your eye on in a big way. All right, what else we have going on out here? Now, we talked about the yields. Going to take a quick look at the yields across the board, because one of the things that we're talking about here, Bloomberg makes a great point in this article, one of the key parts of the Treasury curve, you're talking about the gap between the 5-year and the 30-year touched the highest level in more than 5 years. Okay, so the gap between the 5-year and the 30-year, we're reaching the highest level we've been at in 5 years. And you take a look. When you look at the 5-year, you're approaching about 0.6% is what we'll be yielding on the 5-year. You push it out all the way to the 30-year, we're approaching 2.2%. This 30-year has been on an absolute tear. You check it out. We make a low this morning of 162.02. You put it on a daily. All right, I put that on a 5-year daily. Let's put it on a year daily. You just have to go back to August, and we were trading at 183.06. We were down 21 solid points of 162.02 this morning. Quite the acceleration in the 30-year, and you're seeing that gap between that 5-year and the 30-year extend. The 10-year right now sitting approaching 1.35%. Quite a staggering number. When you take a look at the 10-year in terms of where we were, right, you back things up to August in the 10-year, you were trading at 140.13. We've given up 5 solid points in that 10-year right now. All right, folks, stay tuned. We got a lot to talk about after the break. We've got some Boeing action. They're dealing with some woes this morning. Discovery Communications is trading higher. We got a lot to talk about. Stay tuned. We'll be right back in 3 minutes.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. We get the S&P's off 25 points, a little bit of negative acceleration going on right now. You get the NASDAQ off 170 points. NASDAQ's off about 1.2% right now. Russell is flat. A little bit of divergence there, whether you're dealing with the tech stocks, right, pulling back. You have the Russell, the strongest indice, basically flat. S&P down about 0.6% right now. We got a question from our man Ryan in the YouTube Tiger's Den talking about Fastly, looking for an entry point. So it says, looking for an entry in Fastly. Into its week of strength bar from June, but that all goes all the way back to 64. So we're going to start things off on a daily basis. Here we got Fastly. We're going to jump over to the Analyze tab. Strong sector to be in terms of delivery, real-time content delivery network. CDN Company provides services in the area of delivery, security, streaming media, e-commerce, and private CDN. With Fastly, user can manage traffic spikes to mitigate security threats. They work with Google Cloud Platform to extend the user's infrastructure and application logic for content delivery, back-end workload, infrastructure costs, and scalability. The streaming media services offer global delivery of video content. Talk about a great area to be in, whether it's live video or video on demand. They have Edge Cloud Platform designed from the ground up to be programmable and support agile software development. I'm pretty sure the companies themselves get to write their own, description of what they do. Strong area to be in. No doubt about that. Now, they are a $9 billion company, all right? Big company in a big way. And you jump over to the daily. So, Fastly, they jump up to 136 all the way back in October. Talk about a gap. We spike all the way back down to 60. Let's get the low to be exact, $62.20, all right? It's an exact 50% retracement from where the run really began, going back to their earnings in May. Now, I'm starting from a price point here of about $23. Let me see. Yeah, about $23. Where, you could make the case you start from 10, right? Technical analysis and art, not always a science where you bring this, but I'm starting this really where the acceleration really began, because this thing accelerates in May from $23. It goes a one-way move all the way up to a high of 102. Now, Ryan talked about, we're back into kind of this acceleration in June. So we're going to jump to the weekly in a moment, but I just want to touch on here. First, number one, you're backing off. You're at $78, right? Earnings, obviously, not what they wanted as we're accelerating lower. We've already touched this low once, a 50% retracement. $63.27 might be a good area. You might start to dabble at maybe the $72.67 price point. Somewhere around there is your 382. All right, I wouldn't step in just yet at $78. We got no signs of strength so far since the highs of February 10th. We've just, I mean, look at those red bars, right? No signs of strength whatsoever. From 120, we're down more than 50% in the price of this equity just from February 10th. We got this thing on a daily. We're going to jump over to a 3-year weekly, okay? And this is what Ryan was talking about here. We go back, and he's saying we're into this bar from June. Now, interesting enough, this bar brings you right down to about $64.13, which is pretty close to the area we have, which looks to be support from the November lows. And also, you're talking about right above the 50% retracement of where we are. You know, we did chop around to put it back on the daily again. The 382 does have some support here. We almost made it down to that area in July, again in August, and again in September. You saw the acceleration, though, able to get to the 50%. Doesn't mean you could start a super partial. It's a super partial. You know, you could start somewhat of a tiny position at 72.67. I would be looking maybe to wait for this 63.27. Let it come back down here, and you really want to look for some type of strength. Trying to catch a falling knife here. This thing's got no strength whatsoever from February 10th. They accelerate lower. You got a couple gaps here. They come out with their earnings. It accelerates even lower. Doesn't mean this company doesn't have a strong future, but I would be waiting a little bit from where we are right now. Always looking at Fibonacci levels, and geez, some of the volume, right? I mean, this volume that we got from the gap in October, some big time volume there. We were down here, but again, maybe a volume number you're looking at kind of above where we are, but this is a strong number in terms of the volume we just got on February 18th. Big numbers. I'd wait for a little bit of strength there before we get into the action there. All right. Jumping around to other news we have going on this morning. On the vaccine front, encouraging news. The Pfizer-BioNTech shot stops COVID spread. Israeli study shows vaccine reported to be 89% effective at preventing infections. An interesting time when you think about what we're dealing with, folks. I've talked about it on the program in terms of we're stuck in COVID right now. The numbers are pretty harsh, but we are right on the cusp of coming out of this thing over the next month, 2 months, 3 months, 4 months. You know, that's the variable that we're dealing with here. It continues to be encouraging news. Israel, just a remarkable job of how they got basically almost their entire population, for all intents and purposes, vaccinated. And that is why this news is coming out of Israel. I was looking for the number in terms of how many people they vaccinated here. It's a big number. But in terms of the spread, you're talking about 90%. Now, we knew that these vaccines prevented, whether it was deaths, hospitalizations, cases themselves. We weren't sure if that would prevent the spreading. Looks to be the case, which is encouraging in a big way. Jumping to some non-encouraging news, Boeing. So I'm not sure if you saw the headlines. Quite the tantalizing pictures. Thankfully, nobody hurt. You had a Boeing 77 basically exploding with their engine over Denver. I'm trying to pull up the area. Yeah, so the incident on United Airlines Flight 328 from Denver to Honolulu took place shortly after it took off Saturday. 231 passengers, 10 crew, everybody safely landing back at Denver. You see just fuselage areas, basically debris just sprinkling over the Denver area. So you have Boeing trading lower. You have the manufacturer, of course, trading lower. And you have the FAA ordered checks on the engines. You have Japan's transport ministry grounding aircraft with engine variant on Monday. Korean Airlines, Asian Airlines idled theirs, and the UK banned such jets from the airspace. Rightfully so. Regulators not giving Boeing much slack when you have things going on, especially with their history. Now, talk about an acceleration, though. The market forward-looking, the market saying maybe the fear is a little bit exacerbated over what's going on, and you can understand how when Boeing is dealing with pieces of their plane falling out of the sky after what we've been dealing with, okay, the market reacting a little harshly pre-market, you spike to 207. Boeing's almost up $10 from that price point. Boeing's only down 0.5% right now when you have the S&P down about 0.7%. So the market looks to be shaking that off, but regulators, probably rightfully so, almost overreacting to that news to make sure that they get the risks under control. As you're talking about, I mean, very fortunate that, number one, the plane lands. Number two, you don't have debris hitting anybody on the ground. But Boeing dealing with some tough woes yet again. All right, how about Kohl's? Talk about an acceleration. Kohl's, they're trading higher. They've been trading higher for a while. So you have activist investors. So the group consists of a bunch of investors here. You got McCallum, Ancora, Legion Partners Asset, 4010 Capital. They have a combined 9.5% stake. Nominated 9 directors to the company. Kohl's, look at that acceleration. It's up 9.7% today. But check out this daily. We were just trading at $20 at the beginning of November. You're approaching $60. Kohl's, far above where we were back a year ago at about $50. Kohl's higher. Hey, stay tuned, folks. We'll be right back after the break. Back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps minus 25 points right now. We got the NASDAQ accelerating a little bit lower. NASDAQ 100 now off 227 points. You see the acceleration. You're off 1.7% right now. Tech stocks, the Russell, you could call it the strongest indice, down just 0.2% right now, trading at 2260. Jumping around to other headlines out there. Discovery Communications. So I often talk about Disney with streaming battles, right? Discovery with some strong numbers out here in a big way. You're up 7.7%. They're out with their earnings, getting into the numbers. So they earned 76 cents a share for the fourth quarter, 4 cents above estimates, revenue topping estimates as well. The big one is they're on pace to have 12 million subscribers by the end of the month. Excuse me. Now, for a company like Discovery, I'm surprised in a big way that they're able to plow to, you're talking about 12 million subscribers in the face of how much competition they face from the likes of Disney, Netflix, right? We have HBO Max releasing all of their movie theater productions just to the streaming platform this year. Many others, of course, in the fray. You have Peacock, NBC doing very well. A little bit of a different business plan there. Free and going to be ad-supported. But Discovery, now check out this chart. It's not all about what you've done today, right? You closed at about 51. The market forward-looking, kind of figuring out that they're on quite a trajectory from $20. We're now trading up 7.8%, $55. That's a big number for that company when you think about they just have one platform, Discovery Communications. They do have a number of content brands under that. But, boy, they are crushing it in a big way, up 8% today. Some of the other streaming companies maybe accelerating on that as well. You got Disney up 2.6% today. You see the acceleration they're getting. Quite a bar. Disney climbing towards the all-time highs of almost 193.85. Just maybe on an adoption of basically streaming across the board. Checking out Netflix this morning. Not quite the same, down about 1.4%. AT&T, Time Warner, HBO up 1.1% today in the same way. This one's one I keep on my radar, folks. You know, HBO, they're doing some pretty big things over there. Now, Time Warner, AT&T, they get a lot more going on than just HBO in a big way. But, boy, I think that they made a brilliant decision pushing all of their major production films over to HBO Max. I can tell you I personally signed up for a 6-month deal for HBO Max. Just because I'm a believer. Now, the big thing there is, again, a different business model. You're seeing the divergences, right? Disney goes for the mass market at $6 or $7 a month. AT&T, Time Warner, I think they're approaching $15.99, $16 a month. If you sign up for 6 months, I think they had a deal out there of about $69 or something like that. Are they going to be able to keep those subscribers when you're such in an elevated price plan compared to Netflix, Disney, Amazon Prime, of course, included with Amazon, Discovery, not quite the same price tag as well. But I'm keeping that on my radar. And then you have CMCA, Comcast, NBC, been quite the acceleration, making the shift to their Peacock platform, a free model, ad-supported. I think they got 39 million, something like that, subscribers in a big way. Looks to be the avenue that they chose, showing dividends, no pun intended, in a big way for them, up a 0.1% for Comcast so far this morning. All right, what else we got jumping around in terms of news? I'm going to jump around a little bit here. Taco Bell, they're entering the chicken sandwich war with its own spin, a taco version. Pretty interesting, some of these chains, as the fried chicken trend continues. Yum Brands, of course. Yum, kind of hanging right at these highs of 110, 104, back basically above where we were pre-COVID. You put this thing on a 3-year weekly, though, still below where we were going back to August of 2019 at 119. You basically got more than cut in half to 54. You double that price to 110. Yum Brands kind of hanging at about 104, 105, we'll call it so far. All right, I'm going to get into a little bit in terms of flood insurance. Okay, so we live in Florida, myself. We have many listeners out there in Florida. We got many listeners on the coast of New England as well, let alone across the globe and the country, the U.S. Interesting article out here talking about homeowners and the insurance that they're paying for, and then the value of that insurance and what is to be due. Homeowners face $18.8 billion in flood damage annually. Insurance premiums set by the federal government for those homes would cover less than 1/4 of the potential damage. I mean, this analysis kind of just coming to the forefront. They say nobody knew until today. Not really a fair assessment, in my opinion. There's been some great analysis by this nonprofit First Street Foundation. All right, I'm going to jump over to a chart that you can kind of analyze your own home here. A new report filed, though, by First Street Foundation, dedicated to making climate risk more transparent, first public attempt to apply property-level flood risk data to individual home values, offering almost every homeowner in the U.S. an estimate of its actual monetary risk from flood damage. All right, you get into, folks, Tampa is Hillsborough County. You're talking about now, this is the average expected annual loss per property with substantial flood risk in 2021. You pull up Hillsborough, you're talking about $6,000. You jump to Pinellas, which is where TFNN headquarters are located, St. Petersburg, how about almost $12,800? Okay, you see where we're, it shouldn't be surprising where you're hit. Some of the areas down, of course, in the east coast of Florida, Palm Beach, Broward County, you get into Miami-Dade, you get to the areas of the west coast of California, Santa Barbara, you slide up the coast, Marin County, $23,000. Folks, that's annual loss per a property. Remarkable numbers. Now, this is what the real potential cost of floods exceeds federal insurance premiums 4.5 times over. Okay, and again, some of the areas here, most hardest hit, Hillsborough, right? 311% in terms of the average expected loss versus what you're paying in insurance. Pinellas is 500%. Palm Beach, how about 10 times the damage that might be assessed in terms of what people are paying for. You jump back to Santa Barbara, similar areas. Now, I'm going to encourage you, folks. Okay, firststreet.org. Okay, you go to firststreet.org. We've talked about this. My dad talked about this originally, as they're talking about in the den, a while back. All right, that's why I don't think it's fair to say until today. Yes, there's a new report out today. Firststreet.org. Search on flood factor. Okay, now I just pulled up a house near my house in Tampa. Okay, now you get into the risks here. Now, keep in mind that I am not in a flood zone. I am not. I am not required to have flood insurance. I do not have flood insurance at this time. I plan on getting flood insurance in the near future before we approach the next hurricane season, because it's probably not going to be that expensive compared to the risks, okay? But this talks about basically the risk is not calculated correctly when you're looking at just basically governmental data, whether you're in a flood zone. You're able to pull up, okay? Now this is, we're going to back out a bit. I live in South Tampa area, and you see the risks that are present, folks. Whether you're in South Tampa, the red area is the worst, okay? You slide over to Pinellas, some of the areas over in St. Petersburg especially, all right? Now, you can search any address you want. This is not my address in Tampa, folks. It's not even my street, okay? But it's close to where I'm located, and you can basically pull up the exact data of where you may be. You want to see the likelihood that you'll get a foot of flooding in the next 15 years? That's a 1 in 4 chance. I mean, you go back just in 5 years, that's a 1 in 10 chance that my home might get a foot of flooding in the next 5 years. We're in the statistics business, folks. I encourage you to check that out in a big way. All right? We'll finish that conversation up when we get back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8245. 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Are you grinding in the market but seeing little to no return? Or are you a successful trader simply looking to make his job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. A prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I'm just going to finish up the conversation talking about firststreet.org, and they get their flood factor analysis over here. I'm just going to jump to TFNN headquarters. We are at 300 4th Ave South, St. Petersburg, Florida, in Pinellas County. And this is, what's that street? Let's see where it's going to pull up. Yeah, 300 4th Ave South, St. Petersburg, Florida, TFNN offices. How about that, folks? Now, we're in a high-rise building here, so we would be protected ourselves in terms of where we are, whether it's Suite 200 and 500. But how about some big flood risks in this area? St. Pete, one of the most vulnerable. And you get into the probability analysis, folks, okay? And you don't want to be making decisions with, what are the odds that I flood next year? Well, within the next year, I mean, even this property is talking about, we'll jump into a foot, is only a 6% probability that you flood in the next year, okay? But you talk about 5 years, that's more than a 1 in 3 chance, all right? If you're living at ground level in St. Petersburg, you're talking about 35%. 10 years, you got a 6 in 10 chance, all right? Huge factors. You get down to the graph and where we are, here we are, and it's very interesting in terms of you can see the actual topical outlay of where you are and the differences of the height, the differences of where you are and the risk that you incur. I mean, interesting how some areas, even in St. Pete, maybe you just got a little bit of elevation there in terms of where you are, not quite as dicey, but I encourage you, if you're anywhere near a flood area, okay, just if you're not in a federally regulated required area where you need flood insurance, I encourage you to check this out because I am not as well in Tampa. And boy, it was a wake-up call when I took a look at my area in terms of a flood. I got a 1 in 10 chance of a foot of flooding in the next 5 years alone. That's not a risk I want to take. And the real unfortunate thing here is I am at a pretty high elevation in South Tampa. Okay, I'm going to back out this chart. I'm somewhat near the middle of, now this is South Tampa. I'm going to back it out. Okay, here's Tampa. They consider it South Tampa. I got a nice, beautiful Bayshore Boulevard. I believe that's the longest continuous sidewalk in the U.S. here. talking about Bayshore Boulevard, right on Tampa. Okay, now I'm somewhat, and you can see that as you get into the middle of South Tampa, you do have some elevation. But folks, my elevation alone, right in this area, is about 13 or 14 feet, I think, above, because I rise, and you can see the rise really gets up here in the middle. I mean, if I get hit, Tampa Bay is going to be in big, big trouble, folks, in a big way. So, don't wait for a bailout if this happens, Take some charge, because you want to be protected, and we're in the numbers business. And these numbers, when you look at it, I don't plan on selling my home in the next 5 years. It's a duplex I have in there. I don't plan on selling it in the next 10 or 15 years probably. Well, I don't plan on gambling a foot of flooding in the next 15 years at the tune of about 26% right now. Expected loss to building structure over 15 years, how about $50,000, folks? Big numbers. All right, so please check it out if you're anywhere near that. Interesting data in a big way for sure. All right, what else we got going on at TFNN? Our man Basil Chapman just filled in for Larry Pesavento at 9 o'clock. He'll be coming back at noon for his Tiger Technicians Hour. Folks, head on over to the front page of TFNN. If you have not tried Basil's service yet, the opening call, a great time to try it out. You can sign up. 30-day money-back guarantee, completely risk-free. You gain access to his newsletter. Basil had a great, I think it was like a 32-minute video that he sent out to subscribers on Saturday. All right, that's almost a webinar in its own right, talking about the entire market. He sends out a newsletter every morning for his subscribers. He sent out a video update this weekend. You gain access to the opening call, and you also gain access to his 90-minute live webinar coming up a week from tomorrow, 4 till 5:30 p.m. Eastern Time, a 90-minute webinar with Basil. He'll be in there live. You can sign up, whether it's a month for $149, 6 months, $695, the year for $1195. I encourage you, if you're getting in there, to try out the 6 month, try out the year, because if you're going to keep it, you lock in those savings. If you don't want to keep it, you still get a 30-day money-back guarantee for a full refund. Just let us know if you'd like that. No questions asked. And I encourage you to do it, folks. Don't feel bad about trying something out and asking for a money-back guarantee. That's why it's out there. Check it out. Basil always does a great job. He'll be in there a week from tomorrow with his subscribers. And like I said, he just put out a 32-minute video over the weekend, but he's going to be talking about the impact, the tremendous increase in the public's participation in the stock market over the past few months will have this year forward. Is it market positive? Are there any historical examples to look at? What are the negatives? What sectors could benefit? We've seen some of the sectors already in terms of the Reddit crew, the retail investors, how they're impacting things. What stocks fit that theme? Does it portend a sudden deep market slump? Technical tools should continue to work, question mark. As the economy opens back up, will consumers go back to the way things were, kind of a fundamental take on things, and the COVID-impacted changes will become a part of the new economy. Basil's going to be breaking it all down. Check it out on the front page of TFNN, and Basil will be back doing his program at noon as well. All right, we got a caller. We got John from Oakland, Michigan. John, good morning. What's happening, man?
Hey, you're happening, Papa.
Oh, listen, you're happening too. Thank you so much, man. Thank you so much. It's a great time in my life, man. Got a new son, Edmund Thomas O'Brien the Fourth, and it's a beautiful thing, man, for sure. Well, thanks for calling. So what are we going to be taking a look at this morning, John?
Well, with Tesla and the electric car companies, people talk about lithium, but they're going to need nickel. And there are 4 nickel companies that I watch, and I was wondering if you had any insight into the nickel industry, whether it's Valley or whether it's Glencore or BHP or the old Russian Norilsk nickel, one of those 4.
Just to be honest right out, I really don't, John. The Gold Report, the metals, my dad's the man there. He'll be back doing his program at 3 o'clock today. Okay. Just something I can say is that I definitely have a portion of my position in metals right now, just my portfolio. With the way, yields are rising, the constant battle of reflation. I mean, copper has just been out of control, right? Copper, what are we trading at so far this morning? $4.12. I mean, you saw Freeport taking off last week, even some of the other stocks. But I'm just not familiar with the nickel companies in completion. I'm really not, John.
Okay. And, Freeport's one of those that's also participating in the electric car boom, too. So they need to have electric. So
and listen, that sector's on fire, man. I'm a true believer. You see all these companies that are just up in the ante in terms of how quickly they're going to be transferring their entire fleets to electric vehicles. Tesla, the leader of the pack in terms of their fan base. But yeah, the economy's not going back to gasoline-powered vehicles. Gas is going to be around. That's going nowhere. Crude oil is just fine. You know what I mean? But I'm a believer in that in a big way for sure.
Okay. Well, hey, I appreciate your time, and congratulations again. My son is John the Fourth, so you've got a Tom the Fourth there.
Gotta love it, man. Gotta love it, John. It's always great to hear your voice and hear your call, man. Thank you so much, and you have yourself a great morning.
You too now. Bye.
Thanks so much. Gotta love it. John the Fourth, Edmund Thomas O'Brien the Fourth. We'll have to get those fourths together someday. Stay tuned, folks. We got the S&Ps down 24 points. NASDAQ 100 down 242 right now. We'll be right back.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, just $89, exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the NASDAQ 100 now off 270 points, folks. You're seeing the acceleration, putting it on a 15-minute. Things getting a little dicey. I mean, we began the program at about 13,450. We've given off 150 points. Some of those tech stocks. Let's just jump around to the FANG stocks real quick. You got Amazon down about 2% right now. Microsoft shares down 2.8% right now. Apple shares down 2.7% right now. And Google will finish it off down about 1.4% right now. We've got a question over in the YouTube Tigers Den talking about Shopify, TFNN, a Shopify company. Great company. I mean, talk about a banner year for them. Even backing it up to the 3-year weekly. This thing was at $100. in 2018. We were at $305 less than a year ago. We'll put it back on the daily. Quite an acceleration from 300. You make a high September 2nd of 1145, so you could say an A to B leg of about 850. You chop around, really, I mean, this is a consolidation almost from July 9th to really where we were on December 15th. Now, the cool thing here is you had quite the pop. On December 16th, you accelerate above the B point. You get some nice volume in there. You chop around a bit. We've now traded higher. If you have an 850 point, A to B, you chop around. The C point would be, let's call it somewhere around $880. You add $850 to that, you're looking at about $1,730 potentially. Now, something to keep in mind, though, that I'd let this thing pull back a little bit further, all right? Maybe even you're looking at that expansion. Maybe you come back and touch about 1,200 on this chart is where I might start to dabble. Maybe you let it test even the December 22nd high, which is an area of 1,285. Something to consider here is that as this economy opens back up, you may see some of these companies in particular, like Shopify, that's capitalizing on online business, pulling back a bit as we get that reopen trade. All right, folks, thanks for tuning in. That was a quick hour. We got Fast Market coming up next. Think or Swim with Kevin Hinks. Basil Chapman back in the saddle at noon. Check out his webinar, folks. Check out the opening call on the front page of TFNN. Steve Rhodes, Dave White, Tom O'Brien, my dad this afternoon.